Egypt. So as the Egypt factor drives oil prices and unrest spreads across the Middle East region, Brent crude has breached the $100 mark. And the impact is being felt by the Indian oil marketing companies. Since a large part of India's oil imports is based on Brent pricing, that directly hits the bottom lines of oil companies. Oil firms are already losing 3 rupees a litre on petrol and 8 rupees a litre on diesel sales, and the accumulated losses is 300 crore rupees a day for the oil companies. With India meeting 75% of its oil needs through imports, the crude basket is now inching towards the $100 mark. That was at $90 a mark when prices were raised last on 15th of January, that's last month. The government had earlier said that oil companies will be free to determine retail prices of petrol and diesel till prices stay within that $70 to $90 a barrel mark.
As Egypt simmers, India Inc. is also feeling the heat of the popular protest. FMCG companies like Marico, Dabur, Godrej and Emami, which are seeing strong growth in Egypt, are facing shutdowns of their manufacturing units in the strife-torn country. India's largest paint company, Asian Paints, whose Egyptian operations are the largest outside India, may have to suspend operations, while Infosys and Wipro have flown out all their employees from the country. Manco is now sourcing its products from the Middle East to meet the demand within Egypt, which along with the Middle Eastern region accounts for about 10% of its turnover. Emami started its Egyptian operations a year ago and is in the early days of ramping up operations in the country. And Dabur reported a 41% growth in Egypt during the October to December quarter. The country accounts for 2.5% of its top line.
Okay, let's get an analyst voice. And Ishan Bhaskar, Deputy Economist at Exclusive Analysis Limited, joins us on the phone line all the way from London. Thank you so much, Ishan, for joining us. The first question that everyone's wanting to know, the world is fearing that the Egypt contagion could spread to other countries in the neighboring regions as well. First, could that happen, and what impact could an extended spell of uncertainty have on the uneasiness being seen in the global economy?
Thank you. Well, I think the first part of that question is whether or not that's happening. I think when you look at how markets are reacting, it's very clear that markets in the MENA region have reacted very, very sharply to this, and to a much larger degree. If you look at equity indices, for instance, in Saudi Arabia, the Tadawul All Share Index, which is the benchmark index there, that's lost about 5.3% in the week to 1st of February. Similar story in Dubai. Jordan has fallen to a lesser extent. So in the MENA regions, markets have been far more sensitive. Globally, that's not the case, and markets have been far less sensitive. For instance, if you look at the FTSE over here in London, it hasn't been sensitive at all, and what's happening in Egypt, the events there haven't really led to any sharp reactions over here. That's the case in the US as well.
Right. Ishan, but when you talk of Brent crude, that's topped $100 a barrel, and that is giving oil importers like India the jitters. Do you think this is a flash in the pan, Brent going up to 100, or is it going to sustain there? Inventory data is going to come out in the US. There is an expectation that inventories will build there, and China is also seeing a little bit of softening when it comes to manufacturing. Is crude going to top $100 a barrel and stay there, or is it just a flash in the pan?
Well, no, I don't think it's a flash in the pan. I think what you're seeing now with crude crossing the $100 a barrel mark, which is very much a psychological barrier, you can see that markets are pricing in the risk of an extended closure of the Suez. Now, the Suez Canal is very important because it's a critical choke point, and about 2 million barrels a day of oil goes through that point. And so markets are clearly pricing in the risk of an extended closure there, because that's going to be very, very significant for oil trade. Having said that, what is also the case is that oil has been trending up, over the last year and a half. So I don't think it's a flash in the pan. I think markets have clearly priced in the risk of what's happening in Egypt. But I think we're not in the space of making a forecast for the price of oil, say, an explicit oil forecast. But what we can definitely see is markets are pricing in the risk for that.
Okay, Ishan, thanks so much. Thank you indeed for